Well, thanks for tuning into the Market Wrap. I'm Niraj Shah, and a lot of you who tuned in today must be wondering if there is something more than what meets the eye when it comes to the market behavior. Because aside of the fall that happened yesterday, we've already had about 1500, 1600 points on the Nifty bank for the last week, and Nifty's fallen for the fifth straight day as well. And now, from the highs of nearly 15,400 odd, we had, as the level suggests, 14,675. So it's been a reasonably sized pullback already. Is there more to it? That's the question. Just before I get in our guests, just show the Nifty MRR function on the Bloomberg terminal, but it's essentially the way some of the Nifty constituents would have behaved today. So that will come up on your screen, and then, of course, midway through the conversation, we'll also look at the broader end of the spectrum. But for now, just this 1.81% lower. And yes, there were gainers, Adani Ports, Hindalco, some of the commodity names, because commodities are going through the roof, really did really well. Well, look at the damage that came into a bunch of names. The high flyers for the last few weeks, M&M, for example, came under pressure. Some of the IT names came under serious pressure. With both Tech Mahindra, TCS, etc., correcting quite steeply. And some pharma names like Dr. Reddy is also looking bad. Let's get in Dipan Mehta of Elixir to talk about his thoughts on what's happening and the different facets at play. Dipan, good having you. Thanks for taking the time out and talking to us. Hope all is safe. How do you explain what's happening in the last few days in the markets?
Yeah, good afternoon, Niraj, and thanks for having me on your show. I think what we are seeing the last few days is a typical walk in the park type of a correction. I think there's nothing really to panic or worry about at this point of time. In fact, it's a good amount of hot air being released from this bull market, which had been moving up day after day and had reached, I would say, a bit uncomfortable levels immediately after the budget. And now I think we are seeing some cooling off taking place. So what we saw earlier, 4 or 5 trading sessions was sideways correction, and today was actual decline. I would say reasonably steep decline in stock prices, and I think this is perfectly fine. I think from time to time, if you have such healthy corrections, it tends to shake out all the weaker players, and the stronger players, long-term players who have deep pockets, who have staying power, they get the opportunity to get into stocks on a longer term basis. So the process of stock moving from weak hands to strong hands, I think, will start from tomorrow onwards or at every correction or so. And I think there's nothing really to panic about this time. I know some negative news flow has come as far as the COVID-19 pandemic is concerned. But I think we've dealt with this problem for the past year and are far, far more experienced in India and globally as well. And we have many tools, flexibility to take care of this problem, which is now actually just a problem and not a catastrophe. So I think that this is just a temporary kind of a correction, and investors who are sitting on the sidelines or who have cash in their portfolio must certainly not miss this opportunity.
Dipan, one common worry could be or might be that what if the lockdowns reappear? Because while corporate commentary has been strong until now, it was not factoring in disruptions due to lockdowns, potential lockdowns. As we speak, Amravati is in a state of a lockdown, so to say. And the Chief Minister of Maharashtra has said that if indeed the numbers don't come under control, then places like Mumbai might face the same too. Yeah, how real and present is that danger, and how large could that be a worry?
See, I cannot say or predict about whether lockdown will take place or not.
Yeah,
But
of
my
course.
general understanding is that it will not be a countrywide or even statewide or district-wise lockdown. A few sectors, a few sections, a few areas may face lockdown, that too temporary in nature, a couple of weeks or so. And the lockdown may not be as intense as we have seen in the months of May, June or so. And I think ordinary life will generally carry on. It's just that all these social functions and these public gatherings, restaurants, bars, I think that's where the real pressure will come as far as lockdown is concerned. I think by and large, economic activity, even in the areas which have been called out for lockdown, will generally continue. And what I've noticed surprisingly is that the consumer sentiment still remains pretty strong. For whatever reason, I think we need to really analyze that despite having such a hit on the incomes, we are seeing consumption come back with a vengeance. Maybe it is money saved up on during the pandemic lockdown, which is now coming into play. or maybe it is confidence coming back that not much damage has been done in terms of financials or income. And I think I would say be bold enough to say that gradually we are seeing the animal spirits come out as far as corporates and consumers are concerned. And once this genie is out of the box, you can't put it back in. I mean, these things just gather momentum, and one sector pulls the other sector up, and so on and so forth. And I think we have entered into a nice virtuous circle of higher spending, higher capex, leading to higher incomes, which in turn leading to higher consumption. And government also is playing a very critical role by keeping taxes under control, which were not increased in this particular budget, and doing their part in terms of spending and keeping the tap open in terms of letting the adequate spending power be generated in the economy. And I think RBI is doing a great job in terms of trying to keep the yields lower. I think they're getting into a bit of a issue with the debt market, and we are seeing some amount of, I would say, wrinkles over there. But by and large, I think at least at the RBI, the thinking is that we should keep interest rates at these levels for a prolonged period of time, so that a lot of the industry and MSMEs can heal themselves and get back on their feet and start to spend and invest. So I think cyclically also things should start looking up. So we're very positive on this particular year, notwithstanding whatever challenges may come out on account of COVID-19. We do have a vaccine in
Right.
place. It does work. So let's look forward to great times.
Yep. Dipan, okay, let's talk about what's gotten disrupted. We've seen a bit of a corrective move and a hibernation of sorts in IT and pharma. Today there was a UBS note which spoke about how some of the things may not work out, etc. Bank of Merrill says that the currency may be a big deterrent, and the largest underweight is information technology. There's been a bit of a correction move there. Would you use this as an opportunity, or do you reckon that there could be some more pain in IT?
See, I think these currency scares keep coming up for IT, but by and large, this correction is a great time to buy into software companies, and it's a good hedge against the Indian economy also. And I think that as and when US and UK again start to roar back, you will see IT deals pick up further. And in any case, I think they're sitting on good order book. Valuations are reasonable. We are seeing good visibility of earnings as far as software companies are concerned. We saw that in this particular earnings season, I haven't seen so many managements across the board come out and say so positively. So I'm not too concerned about IT at this point of time. Pharma, you need to be a bit selective and go with the larger companies, buy a basket of pharma shares so as to avoid US FDA risk factor. And by and large, I think you should be fine. So I'm not negative on IT and pharma. In fact, there are very few sectors one can be negative on at this point of time.
Okay, let's polish it off with one conversation on PSUs, Dipan, because that seems to be that space where the large interest is right now. Post budget, post this whole divestment announcement, PSU banks, Concor, BPCL, what have you. What's your sense there?
First of all, I can't believe myself actually saying that we are quite positive on PSU banks. I mean, all these many decades have been negative, but I think that maybe enough is enough. And you could see a fabulous trading rally in PSUs for in this current year. And these stock prices could easily go up 50, 60% or even double. Because actually the alpha which will come in their net profits will be phenomenal. I think this quarter onwards, or maybe June quarter to be really sure, you will see sharp declines in provisioning and credit costs. And even if the profits are at the same levels, you could see 30, 40, 50%, even doubling of net profits. And that will enthuse a lot of investors. And a lot of the problems with the PSU banks are well behind them. Of course, because of the structure and the HR policy, they will get into a problem 3 years hence. But I think next 2 3 years are again great times for PSU banks. So I'm very positive on PSU banks, and maybe you will find surprisingly that they may outperform the likes of HDFC, Kotak, ICICI. So in investing, you don't have to buy the best company. It has to be the best investment. And I think within the financial services, banking, BFSI space, I think PSU banks offer the best risk-reward ratio at this point of time.
Reassuring, Dipan, your conversation. I think a lot of people who would have been nervous would take heart from this. Thank you so much for being with us and giving us a sample of your thoughts. Look forward to talking to you more often.
Thank you, Neeraj, and all the best.
The pleasure was ours. Thank you, Dipan. And viewers, just before we wrap up, as I promised, I hope this conversation in some ways gives you some sense of what the near term could look like. I just want to quickly throw a light on what happened at the broader end of the spectrum, because as you saw on that Nifty IT chart, stocks like Zomato, InfoEdge, excuse me, corrected about 10% today. But let's get that quick sense of what the mid caps did in the session to get a check on the market breadth, and then what stocks fell and what did not. I think it'll be important to get a sense of that. So 114 advancing to 387 declining. So obviously the breadth was pretty shabby, as is evident for most people, as most people would evidently know. But look at the losers there. So the insurance players, which had gained quite a bit, corrected quite strongly. The banks, so New India Insurance and General Insurance. There's some weakness in banks, so Central Bank, Indian Overseas Bank, Bank of Maharashtra. PSU banks actually crumbled today. Some weakness in Inox Leisure and a couple of others. The real estate names like Godrej Properties and Prestige 2 came off. What did well? Sonata Software a little bit. Some of the copper names like Hindustan Copper, because of the copper prices moving up. So commodities essentially didn't have a bad day. And I must say that while large cap IT suffered, mid cap IT had a really good run with Sonata, Cyient Limited, Zensar Tech, etc. All of them, Force Source, doing very well. So mid-cap IT certainly stood out in trade. Let's see if this lasts. But that's it on this slightly different market wrap today. But I hope you found it useful. Thanks so much for tuning in, and have a great day ahead.